You're listening to the Unlocking Africa podcast.
I have multiple experience across the financial sector in Nigeria. Started from the commercial bank where I had experiences across treasury, sales, and also trade finance. For me, I do not see it as a crackdown. I see it as an opportunity for smaller players to consolidate, to become one strong entity, to be able to withstand the shocks and some of the things that would come your way as a digital asset player. What we are going to be seeing in 2026 is more institutionals that were on the sidelines will now begin to step into partnerships and these conversations more confidently than what we've seen in the past.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to another episode of the Unlocking Africa podcast, where we explore the ideas, innovations, and strategies that are unlocking Africa's economic potential. Today, we're discussing one of the most important shifts happening across Africa's financial systems in 2026. New tax regimes, new regulatory scrutiny, new capital requirements, and major changes to cross-border payments and remittances. Joining me today is Ayotunde Alabi, CEO of Luno, Nigeria, one of the continent's leading cryptocurrency platforms. Ayotunde brings over a decade of experience across finance and technology and is a SEC-sponsored individual with certification from both the Chartered Institute of Stockbrokers in Nigeria and the Chartered Institute of Securities and Investments in the UK. He sits at the intersection of traditional finance and also digital assets. Ayotunde, welcome to the Unlocking Africa podcast. How are you?
I'm fine. Thank you very much. I'm happy to be here. Looking forward to our conversation.
And I guess the conversation today will be around your experience when it comes to what you've done across finance and technology. And it feels like 2026 has been a pivotal year for payment and digital assets in Africa. But before we get into that, I was hoping you could give us a brief introduction into who Ayotunde Alabi is.
All right. Thank you very much once again. As you've mentioned, my name is Ayotunde Alabi. I'm currently the country manager and CEO of Luno, Nigeria. In terms of my experience, I have multiple experience across, the financial sector in Nigeria. Started from the bank, the commercial bank, where I had experiences across treasury, sales, and also a bit of trade finance. And then I moved into investment banking proper with FBN Quest and also with ARM, where at some point I was client facing, speaking to customers and obviously advice on an advisory role for investment. And then also did a bit of treasury and asset management work around just asset and liability management within that organization. I also have experience across fintech, primarily around cross-border remittances and payments, supporting infrastructure across international money transfer operators. And also very recently, I am currently, in the digital asset space, which is obviously the next phase of growth advancement for the financial sector.
Fantastic. Thank you for that introduction and giving us an overview of your professional experience. As I mentioned in the introduction, 2026 feels like a pivotal year for payments and digital assets in Africa. So from your vantage point as CEO of Luno Nigeria, what would you say is fundamentally changing in the financial system right now?
Yeah, I would say majority of the institutionals that were on the sidelines with respect to digital assets are now coming into the party, right? So 2020, 2024, 2025, a lot of players were on the sidelines, and for a good reason, because there were no clear guidelines and policies to support the participation of institutionals like the banks, the pension fund administrators, and fund managers in Nigeria specifically. But now it is becoming a bit more clear. And, we are already seeing those kinds of clarity in terms of guidelines and regulation across multiple African countries, which obviously is now cascading into Nigeria as a case study. So what is changing right now is that more institutions are embracing this new technology called the blockchain, and obviously trying to leverage that technology to support their business and sort of like help them to serve their client in a more efficient manner. 2026 is a pivotal year, as I've mentioned, because this is the year where the core essence of digital assets and blockchain technology, by extension, is going to come into full bloom, where we've always said this in the past, that blockchain technology and digital assets are not going to replace the banks, but they are the bridge between what could be and what is. And 2026 is when we see all that coming into the fore. Right now, banks are already partnering with digital asset firms to build local stable coins backed by fiat currencies that is, resident in the bank. And that's what we've talked about in the past, to say that, the current way of sort of moving monies across the African corridors is inefficient, but blockchain can help solve that. For example, just recently, Luno launched in partnership of the Standard Bank and a number of other interesting institutional players, launched the digital assets, the stable coin backed by Rand in South Africa, which is the ZARU, which obviously is to support the efficiency of movement of current intra-currency across the South African corridor. And these are the kinds of partnership that we'll continue to see as, this year unfolds.
You mentioned in terms of doing no guidelines or clarity, but with that increased clarity and guidelines comes increased regulations. We know in Nigeria, it has classified cryptocurrency as a financial securities and introduced a comprehensive tax regime. Do you see this as a crackdown or a maturation moment?
I think it is a maturity. I think we are getting to a point where for any mature industry, these things are expected to happen. First is to ensure that the serious players are supported by obviously the guidelines and regulation. And obviously no serious player that wants to play in a jurisdiction would assume that there's not going to be some sort of tax that is, to the government or, by virtue of the operations, obviously, because you're also making profit from that jurisdiction. So I don't see it as a crackdown. I see it as an opportunity to understand exactly who the serious players are and who the fringe players are, right? So this clarity, these guidelines, we just very recently, the SEC in Nigeria has also increased the minimum capital requirement for digital assets, exchanges and custodians, all in the bid to ensure that the strong players are there, because again, it signals two things. First and foremost, it tells the foreign investors, for example, that this market is ready and ripe for foreign investment in this sector. Secondly, it also gives confidence to the investors, to the everyday investors in digital assets, that their asset is with, for example, a strong firm that is already, obviously by the minimum capital requirement. Because again, if an exchange or, a player can put down, close to $1.3 million as the minimum capital requirement that they're operating with, and it signals to investors that these people are serious players. And for me, I do not see it as a crackdown. I see it as an opportunity for even smaller players to consolidate, to become one strong entity, to be able to also withstand the shocks and, some of the things that would come your way as a digital asset player.
Thank you for sharing that. So if we look closely at the crypto tax dimensions in Nigeria, because this is where many investors might ask those hard questions, individuals are facing 25% capital gains tax amongst other taxes. How should founders or retail investors think about crypto investing differently in this environment?
I would say again, just to the penultimate comment you mentioned around a maturing industry, right? So even in the traditional financial, sector and some of the TradFi investment that you currently would see, there is the provisions for those capital gains tax. So this is obviously another assets that has been classified as a, like as an asset in the country, and it is no longer illegal, right? Or it was never labeled illegal. It was just not accepted, and by some, by the regulator, it was just not clearly defined. So right now, when investors come into digital assets, they should understand, and I expect that they will understand that this is now a regulated asset, and with regulation comes obviously recognition, and with recognition also comes the responsibility to also pay to the government or pay to the tax what is due them across multiple jurisdictions. This is what is in play. You make money from your investment, you pay your capital gains tax. It's not something new, but again, because of the main demographics of the players in the market right now, because again, in Nigeria, the demographics is around, it's obviously the youth coming that are not really aware of, the taxes and all those things that come with investment. But now it is also a journey that we also are helping our clients to understand, to say that capital gains tax is not entirely a government crackdown. It's just what you would ordinarily find with investment around your normal ordinary investment. And this is not only restricted to only digital assets. The government has also come again to talk about even the traditional assets like stocks as well. So that tax regime is not limited to only digital assets. However, it's sort of cut across multiple assets in the capital market. So I think our responsibility basically, because again, it's a new regime, is to continuously educate our customers and continue to educate the public about, and the government as well, in conjunction with the government, to continue to educate the players, the investors about this tax regime and what it will mean for their investment. The intricacies are still being worked out because obviously the government, also taxing agencies, need to understand exactly what represents a taxable event. But we're getting there, and we're still straightening out, the intricacies of that particular identification of what a taxable event is.
In addition to the tax comes increased transparency, which is good. Exchanges must now track and report transactions to the Nigerian Revenue Service. Do you think this level of transparency builds trust, or it risks slowing down the actual adoption of cryptocurrency?
That's an interesting question. I think it builds trust to the extent that there is also a consequence for non-transparency, right? What is a growing concern across multiple responsible players in the industry is that when responsible cryptocurrency platforms like Luno sort of adhere to the rules and regulations and the transparency requirement by the agencies, by the government, and also by the sort of regulators, what then becomes of the players that do not adhere to that transparency? Because again, sometimes cryptocurrency has taken a form where people assume that it is a way to hide or do things that is not open to everyone, So we are going to be transparent, obviously, but the growing concern is what happens. The people, so there should not be any hiding place to allow for other players that are not irresponsible players to continue to operate under the shadows. And that's why there was a campaign where there was conversation around whether P2P was good for the industry, that's peer-to-peer transactions, whether it was good for the industry or not, just in the bid to ensure transparency. So I think it's net positive. It builds trust. And it sort of like gives confidence to the sector, but also the growing concern is about the players that don't have the intention to participate in a transparent manner. What happens to them?
You highlighted something quite key there in terms of eliminating players that hide in the shadows. We know that many African countries still operate in regulatory, we call them grey zones. Do you believe Nigeria's clarity gives it a competitive advantage in attracting serious digital asset players?
Absolutely. I think so. I think, yes, to your question around whether it attracts, because again, some of the players are also just waiting. They don't know how to step into the market, right? There is, you think about how some big players, were also sort of got their fingers burnt at some point because they weren't sure as to what the regulatory requirements were. And instead of adopting a self-regulatory stance, they sort of just operated in a manner that they deemed fit. But when the chips were down, then they got fingered for a number of things, and obviously they stepped out of the market. So other crypto exchanges, other global exchanges as well, are looking into the market, but they can't come in until there is a clear guideline. There is an absolute clear guideline. And where we are currently, we are, more than the gray zone, but it is not clearly black and white at this point in time. It's not clearly spelled out what the rules would be, in the future. And that's why some players, I believe, are still sort of like on the fringes, just looking inwards and getting ready for when there's going to be clarity in the sector or in the market. But beyond that as well, I think that, when there's clarity, right, what happens is that just recently, Nigeria's name was taken off the FATF gray zone, the gray list rather. And that's going to the fact that, amongst other things, that we had instituted a policy, the Investment and Security Act, that classified cryptocurrency as an asset, and also give some sort of like clarity with respect to who regulates what with respect to digital assets. Right. So those kinds of signals are also something, because again, as a global player, you don't want to come into an environment where you are in a gray zone and then everything you have to do almost feels as if it's suspicious. So that also helps. So when a country has a clearly spelled guidelines, that also sort of like gives it credence across agencies like FATF, for example, it signals to the other players, the global players as well, that, this is clear, it can come in and operate without any restrictions as well.
Beyond taxation, another major shift is the recapitalization. The SEC has introduced a new 2 billion naira capital requirement for digital asset exchanges, which I believe is a 300% increase. Does this strengthen the ecosystem, or does it risk eliminating innovation from smaller players?
When you think about, or when you look at that policy, right, it is not only sort of restricted to the digital asset players, it cuts across all the capital market players. And the question you asked, I think I mentioned earlier, the thinking, at least directly from the SEC Director General, is that we want to position the industry, we want to position the sector as a serious sector. Not everybody should be able to create an exchange, because what happens is that then investors would go to those exchanges, and then when those exchanges collapse, the investors will lose their funds without any recourse to any capital base or whatever. So what this is doing is strengthening, in my opinion, is strengthening the ecosystem, right? What the DJ has said, and this has happened in the banking sector in the past as well in Nigeria, where capital requirements were raised, and banks that couldn't meet up with those capital requirements started to merge, and then it became a stronger institution. So I think that is what the DJ has sort of proposed to say. Look, it is not to weed out smaller players or kill innovation. It is just to strengthen the core of the sector, where the minimum capital requirement for any exchange, because as an exchange, you are dealing with investors, assets as well. Or custodians, right? You are custodying. So if there is a breach, for example, or something like that, there is a capital base to fall back to, right? And we've seen multiple experiences, even in Nigeria, where exchanges have gone under because, first and foremost, there was a hack or breach in security, but more importantly, there was no capital base to call to support that breach. So it is from experience, and I think that it is not to stifle innovation, but I think from Digi's perspective, it is to strengthen the industry. So there's going to, again, exchange and custody activities is not the only innovation. As a matter of fact, I think it's becoming obsolete in terms of when you think about innovation in Nigeria as in the digital asset space. Those other ancillary activities in the digital assets are not required to come up with 2 billion naira, for example, and there are still pockets of innovative activities that can come up within the digital asset space.
You touched on a key point, which is we saw similar in the banking industry in Nigeria, and banks started to merge. Do you expect consolidation in Nigeria's crypto market over the next, say, 18 to 24 months?
Well, I think it remains to be seen. The sector is, just coming up, right? I think that there will be a time where people would have to merge, or they would sort of cease to operate as an exchange. And that's, the conversation that is happening right now. You're going to get to a point where you either sort of like comply or almost, die essentially. So I think for serious players that want to continue, the business of, exchanges or custody or what have you, then you have to choose between either you consolidate if you're able to come with a capital requirement, or you risk, or you decide that okay, maybe this is not the route to go for you as a business, basically. So I expect to see mergers from serious players that want to continue to operate in the sector. Otherwise, then it becomes a case of non-compliance, and obviously institution to exist. The SEC has sort of given a deadline of, I think, more than a year. June 2027 is when the enforcement actions and the compliance is expected to take full effect. So, there's ample time, but I imagine that serious players that are not able to meet up with the capital requirement would be forced to merge.
So with the June 2027 deadline for compliance, how is Luno positioning itself strategically to thrive under these higher thresholds?
Well, the approach we've taken, even before the capital requirement increment, is to constantly deliver value to our customers. And, that's so again, nothing has changed from the core strategy, which is obvious to deliver value, because it's one thing to have the it's one thing to have the capital base, and it's another thing to constantly churn out the value for your customers. And that's the approach we're taking. We're not focusing on the capital requirement, because obviously it's something that we will definitely meet. What we are focusing on right now is to ensure that as the market is, for example, we've launched a couple of products that is also just ensuring that at any point in time, depending on where the market is, customers come on Luno and find value. We've launched tokenized stocks, that is also a hybrid of traditional finance and digital assets, and we've merged that into something that is investable for our customers. We are also doing bundles, that is like an ETF, obviously again, to that commingles digital assets and the normal stocks that you have, like stocks from Nvidia, Tesla, rolled into one and then presented to our customers as well. The number of other products, but at the heart of what we do, or at the core of what we do, is to constantly deliver value, regardless of what the minimum capital requirement is.
So we're seeing regulatory tightening locally, but we're also seeing policy changes internationally that affect Africa. One of those is remittance, which are key for many African economies. We know the US has introduced a 1% tax on cash-funded remittances. Do you think this could accelerate digital remittance channels and crypto-based alternatives?
I think so, yes. I think because, again, you look at the emphasis on cash as the only taxable remittance. And so you think about it, Nigeria has done something similar in the past, where we were trying to eradicate the cash circulation in the industry, and we sort of like, or in circulation in the economy. And we put, incentives like this, for example, to ensure or to force people to use, the digital or the electronic payment system. So it's the same thing, right? It is to obviously grow the digital asset adoption, digital sort of channel adoption for remittances in the US, for example. So it's not something new. I think it just forces people to obviously to explore digital assets, as we mentioned, and also other digital pathways for remittances. So for me, I don't think it is. I don't think it is something that is strange. I just think that obviously it's a forcing mechanism to ensure that people now use, a more efficient way.
We've all seen, heard about the figures of the billions in remittance that are received in different African countries annually. How do you see crypto reshaping cross-border flows over the next, say, 5 years' time?
Oh, no, I think it is already happening. I think people are already shifting away from regular remittances, wire transfers and things like that, and are now sort of favoring digital assets because it is faster, it is simpler, and it is obviously safer. So if I were to remit money from, say, a North American country, let's say Canada, for example, to Nigeria, the path to remittance that, if I were to remit monies to my siblings, for example, the path to remittance would be for the monies to get to the actual hands of my sibling would be that, for example, let's take a bank, RBC in Canada. What will happen is that, and I'm sending to, say, a GT Bank in Nigeria, what's going to happen is that the monies will leave RBC, touch an intermediary bank, will be HSBC in the US, and then come to Nigeria, basically. So, and that takes about, say, 5 days of, if you're lucky, 3 days. And then with charges across each touch point of that transfer journey. It's not the same for digital assets. In less than 5 minutes, you can get the same money, whatever amount, with a tiny fraction of the cost that you would have incurred sending monies across those channels. So it is easy, and it is super efficient. And that's why we are seeing that shift. The volumes that we're seeing in African countries, in Nigeria, South Africa, and I think Kenya, are trumping the volumes that we see in the everyday for stablecoin remittances and flow. It's trumping the remittance, the entire remittance volumes that we've been seeing before in Nigeria, for example, across the same period. So the shift is already happening. People are favoring more stablecoin pathways or digital asset remittances compared to the normal, fiat or the orthodox fiat pathways that we currently have. And that's why more banks are embracing this technology to ensure that they tap into the efficiency of the technology and then use that to also facilitate, remittances, as it were.
If we can, let's bring this back to Luno specifically, because you've made several strategic moves recently. I know you partnered with Discovery Bank to integrate crypto trading directly inside a banking app. Would you say this is the beginning of crypto becoming mainstream retail finance in Africa?
I would say yes. I would say this is the first time that a bank, one of the big banks, have partnered with a cryptocurrency exchange to offer cryptocurrency or to offer digital assets to their clientele. So this is obviously the step in the right direction, obviously for Africa, but obviously this is, like you mentioned, a signal of cryptocurrency digital asset becoming mainstream. We are already seeing, different. So when that happened, what then followed was that we launched a backed stablecoin in Africa as well. And the partners were Sanlam, which is the biggest non-bank financial institution in Africa. We also partner with Standard Bank, which is obviously also the biggest banks in South Africa. And then we also partnered with Lesaka, which is obviously also one of the biggest remittances player in South Africa as well. And also Easy Equities, all listed on the Johannesburg Stock Exchange. So these are players that have, reputation and also strong recognition across, the financial sector. And they're partnered to launch a stablecoin, which obviously is digital assets. So crypto is already mainstream in some African countries. In Africa, it is mainstream because every serious remittance player uses stablecoin. And we are seeing that also coming into other even less prominent African countries as well. So it is mainstream already. Like I said before, what we are going to be seeing in 2026 is that more institutionals that were on the sidelines will now begin to step into these partnerships and these conversations more confidently than what we've seen in the past.
And for this to work, security is obviously central to that mainstream shift or adoption. I know Discovery's Trust Alert, it uses AI to monitor suspicious activity. What type of security and trust infrastructure are we seeing in Africa's crypto space?
Well, the number of sort of like already established security identification technology that already existing today and that is properly fit for purpose when it comes to digital assets, right? So nothing has changed. What are the main security issues that we are faced with, for example, in the industry? Identity theft, which is also some of the problems that is already been faced by traditional financial institutions as well. So the technology for security, obviously, some can also directly sort of apply to the digital asset space, but there's also partners and also technological companies or security companies that have also sort of optimized for transactions across the blockchain as well. So that is already in effect. And as a matter of fact, I can say confidently that since the time that Luno has been in existence, we've never had any security breaches across the multiple jurisdictions that we currently operate in. So it is a testament to the fact that there is indeed technologies that would support the safe operation of digital assets, the digital asset activities across, the sector. Right. So I think, yeah, that's how I would sort of like think about it as the question you've posed, yes.
We know that with trust and security, it drives growth and scale. You've recently launched some new products, Nigeria's first crypto staking product in 2025. Would you say we're moving away from speculation more to, say, yield generation?
I think yes, yield generation and also other multiple use cases like remittances that we've talked about, extensively in this conversation. But yes, so we are expecting institutions to come. Institutions are already coming in. And institutions will come into, for example, if you're talking to family offices, you're talking to, hedge funds, you're talking to pension fund administrators, whilst they expect some volatility, do not expect that, they come into a sector where it is obviously nothing is driving it or there's no fundamentals backing some of the movement. So serious players are coming in. And when they come in, they don't expect, just random volatility of sort of like speculative activities. And that's why there is that shift already. People are thinking about what next, how do we adopt or how do we apply digital assets? And then we can talk about some of the other emerging technologies or innovations like tokenization and things like that. But to your point, yes, there is a growing shift away from only speculative activities to yield activities like staking, for example, across some popular or prominent tokens and also even stablecoin yields as well. And we have all that on the Luno. So yes, but more importantly as well, there's also the remittances use case that also like is driving also interest in the sector.
And with this evolution, you've also introduced tokenized US stocks to Nigerian investors for, I believe, as little as 100 naira. What would you say this signals about the digital asset space in Nigeria?
Yeah, I mean, it just shows or indicates what's possible. The next phase of tokenization, as you've mentioned, or as you referenced, will be to tokenize local assets. We've tokenized foreign stocks, for example, in the US. We can do the same in Nigeria and even move away from stocks and go to like fixed income products and things like that. So it just signals to the market, what's possible, right? People have talked about tokenizing even real estate in Nigeria. All these things can happen. We've seen tokenization of real estate assets already in the United Arab Emirates. So it is possible. And that's the conversation that is taking shape right now, where tokenization of real world assets from, money market instruments to short-term, investment instruments and things like that. So it just shows that there are myriads of things that are possible within this space.
Keeping on the theme of tokenization, I believe over 10,000 users adopted tokenized stocks in South Africa within the first few months. What has adoption looked like specifically in Nigeria so far?
Thank you very much. The number has grown now in Luno, rather, to about 80,000.
Wow.
And Nigeria has about 15,000 of that number in terms of adoption. So, and again, it's a growing number, right? As people continue to understand exactly how to interact with this product, then, and also the investment that we've sort of committed to educating our customers as well, then that is something that, we'll continue to see, growth basically. And again, you see, like I said before, what we do or the strategy for us, regardless of whether the minimum requirement is 5 billion naira, for example, for us, what is important is delivering value for customers. And we're already seeing that shift, right? Bitcoin is at, a 2-3 year low at this point in time. but there is an opportunity for customers to rotate away from BTC and go into stocks on the same platform. Because again, the volatility in Bitcoin is not the same as the volatility even in the stocks market. And that's the value that we present to our customers to say, we're not only a crypto platform, we are also a platform that exposes you to other asset classes, right? Just to your question, 15,000 in Nigeria adoption locally, but also it's just the fact that we're able to sort of like present this value to our customers in a way that they're happy about. Is something that is really rewarding.
You highlighted the importance of education. We know that regulation is tightening, products are evolving, so education becomes critical. Luno and Old School Africa are launching a crypto education program. Why is education more important now than ever in a more regulated environment?
Well, you've mentioned a number of things that would be foreign to a beginner, right? We've talked about tokenization. We've talked about even the new taxing regime, capital gains, what drives the market, stable coins and things like that. A beginner might feel overwhelmed just by the sheer knowledge gap that they think that they need to sort of like cover to be able to, participate effectively in the sector. So we are bridging that gap with this, with this partnership with Old School Africa. And we're, the test phase is 15,000, but we have our sights on even more than that in the future. We just want to ensure that, from a Luno perspective, people are not coming into the sector blindly. They are coming because they understand, the ramifications of what this can mean for them in the future. And that's why we've taken again, one of our core values is to ensure that every time, it's education, we are teaching people. We're the first to come into Nigeria, by the way. And some of the players that you have in Nigeria, for example, also started their journey. I'm talking about crypto exchanges. Some of the founders started their journey on Luno. So it's a household name. I will continue to lead in that regard to ensure that the next batch of newcomers are also getting the opportunity to learn from some of those things that we've made available for them.
We mentioned or we've discussed how education is key for preparing the next generation and setting those foundations for the future. So if we look out to, say, 2030, what role do you believe regulated digital assets will play in unlocking Africa's economic potential?
Oh, yeah, fantastic question. I think that it's just, quite interesting to think about what the future could mean, or what this innovation or this sector, this space could mean for the future of Africa, right? One is that obviously more people are going to come into the space and would be, or regulated players would be at the forefront of that. The current direction of the space right now is regulation. When we leave that phase, it will go back to innovation as it was before. So the role that we will play would be to handhold the next generation of crypto players or the crypto enthusiasts or digital asset enthusiasts in just bringing them into the space and sort of exposing to them the possibilities of what they can do with this technology. And that's on the retail side. On the institutional side as well, I imagine a time in the life of institutionals where we don't have to wait 2 days or 3 days to send monies across, from via the banks as well. And then the banks will start to interact with, digital assets in a more meaningful way. Just as we've seen with Discovery Bank, I imagine that a number of banks as well in Nigeria and in Africa would, bring their customer base into the knowledge of or the availability of this asset class on their platform as well. So the opportunities are just immense. I imagine that in real estate, in agriculture, even in health, there's going to be the application of this technology, the blockchain technology, into those sectors. And this idea or these possibilities will be registered in the hearts of, the innovators, basically, because of trainings like, the partnership we have with Old School Africa and just they're just putting into the minds of people, what is possible with this technology.
If we continue looking into the future in the next 5 to 10 years, do you see regulated digital assets and blockchain networks becoming, say, core financial infrastructure for Africa's trade, remittance, or capital markets?
Yes. The simple answer is yes, because we're already seeing that. Just this morning, I was going through a report on the impact of stable coins on oil remittances in Nigeria.
Wow, okay.
Yeah. Again, when you look at the imports and the export as well in Nigeria, you would obviously see that the oil sector is leading in the charge. And the problems that the oil sector always had was, outward remittances and things like that, because obviously it put pressure on the foreign reserves or dollar reserves that we have in Nigeria. But with the advent of, stable coins, for example, the dependency is not only resting with the CBN at this point in time to always bring out, or to always sort of like fund these exports. Now there's stable coin, there's USDC, and then there's USDT that also is regarded obviously as an acceptable form of remittances across. So you see that is already sort of like changing the narrative with respect to remittances and just how we can sort of fund our imports, as the case may be. Also, some like the top 5 sector also that's obviously support that, the import dependent sectors in Nigeria. You look at the car, the motor importation in Nigeria as well, the car importation in Nigeria. Suppliers are requesting, or car dealers abroad are requesting for stable coins. Right. They're saying they want USDT, they want USDC. Beyond, so they don't want USD anymore in terms of in cash or fiat. They want USD because it helps them to move or navigate faster. So again, it is just, and that's how the future is going to be shaped, basically. So, to your question, that this is how I feel that remittances, outward remittances, obviously, will be supported and impacted just by the advent of, the digital asset space in the future.
And with that in mind, how is Luno intentionally positioning itself so that it becomes part of the core financial infrastructure?
Yeah, very good question. We recently, I think only last year, launched our trade desk dedicated solely for stablecoin remittances on large blocks of, stablecoin remittances. So what the trade desk does is to help settle and match block stablecoin orders from, oil companies, from car dealers, from people with suppliers abroad that are requesting for USDT. So we're already in the prime position to help facilitate that transaction in such a way that obviously is transparent, is secure, and is also safe for our customers. And customers trust us because, again, we've been around, for like 10 years in Nigeria, and the first in Nigeria, and we've been here, we've not gone anywhere. So an oil company, for example, would rather trade with us than go through the P2P channels, obviously, because that can expose them to some risk, even the risk of losing their funds, basically. So we're primed to support that flow, and we're already seeing that.
Quote of the week.
As people, we often have quotes, mantras, African proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
Yeah, it's a bit cheeky, but
we like cheeky.
It's a bit cheeky, but it's something that it sort of like allows me to take control of those situations that I'm sort of faced with most of the time, and not sort of like just submit to chance, basically. And that's a very, very short quote. It's trust in God, but lock your car. And every time I think about, just how helpless or sometimes, hopeless a situation is, and I want to submit everything, and just sometimes, as Africans, we sort of like say, look, God permitted it, so there's nothing I can do about it anymore. But I trust in God, but I lock my car. And that's the way that kind of sort of propels me to go over and beyond to ensure that I do things in a way that I know that I've done my best.
Thank you for sharing that. And I can say categorically that is the first time I have heard that, and it has been shared on the show. So fantastic. I like that one. So Ayotunde, that has been an extremely detailed and valuable conversation. I think some of the key themes or lessons from the conversation today is that within the African markets and the digital asset space, we are moving from grey zones to more formal frameworks, and also moving from speculation to more structured participation. And some of that fragmentation that we're seeing is becoming more consolidated. So if we get this right, it could signal a lot for Africa's economic future and development. So thank you for joining us today, and thank you for sharing your knowledge, experience, and some of the innovative work that you're doing as well to push things forward.
Thank you very much for having me. Bye.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.